So with that, I'd like to introduce our first session. Annemarie Tierney will be moderating the first panel. Annemarie is really the architect of this report, the Crypto Conundrum. She led this project. She's a senior strategic advisor to the Chamber. And we'll welcome all of our panelists as well. And Annemarie, I'll turn it over to you to introduce your speakers.
Okay. Thank you. Good morning, everybody. Just sit wherever you want. I'll sit on the end. All right. And I have notes in case I forget anything smart I want to ask you. Cynthia, you want to just sit here? Does everybody have a working mic? Yeah? All right, test your mics. That's going to fall on the floor. Oh, well, I'll get that later. So I think as Perianne said, we started this project, I'm trying to think, over a year ago when we started thinking about ways that the Chamber could be helpful to the industry. And I chair the Token Alliance Committee for the Chamber, and we're focused on everything SEC and CFTC. So we're very proud of the report, and I'll introduce our panelists who had a big role. But I want to give a special shout out to Rick Coyle, who's not on our panel, but who is the main drafter of, I think, a really, really good piece. First, I'd like to introduce Katherine Dowling from Bitwise, Morrison, Warren from Champman, and the other main author of the piece, and Cynthia Bessette from Fidelity. And I thought, I have a bunch of questions, but we've all been working on this for so long, I think we'll be a little bit organic. Why don't we start with a little bit of the history of why in 2022 we're still having this conversation. For those of you who are not familiar with the space, SEC has to approve new products that are traded on the stock exchanges, and a spot Bitcoin ETF would be a new product. So the process has to go from the exchanges to the SEC, and then the issuers get involved. So do you want to start, Morrison, sort of where we started in 2013 and where we got to now?
Sure. Obviously, Bitcoin was a new asset. And in 2013, when the Winklevoss brothers wanted to bring a ETF, it received scrutiny at the SEC, which was appropriate considering it was a new asset. The obligation for issuers is to prove, and this is the reason for this, is these are exchange-listed products. In order to list a new product, as Annemarie had said, there is a process, and that process requires a rule change, a rule variance to allow for the product. That rule change has to be pursuant to requirements that really are trying to ensure that there will not be a circumstance that allows for manipulation or to harm the public. To do that, the exchange, and I believe the NYC at the time, had submitted an application to the SEC, and the SEC had expressed some concerns that the industry or the Bitcoin itself and the ecosystem wasn't developed enough, and there were standards that were put in place or at least provided that would if those standards were met, arguably you could bring a product. Those standards were really, there were two things. There was a question as to whether the Bitcoin itself was uniquely resistant to manipulation, or was there a regulated market that existed for Bitcoin whereby there would be the possibility for surveillance sharing arrangements to exist, thereby manipulation could be detected. Well, early on, none of that was proven, and so I will say that there was considerable effort through the participants in these processes, the 16 applications, to try to answer those questions. And it's our belief that they ultimately did. Both Bitwise and Fidelity did a fantastic job in providing the data necessary to reach the conclusion that market manipulation, the possibility of it was remote enough so that the product could come. But the SEC ultimately decided that nothing was enough, right? And so we are where we are.
And to that point, Katherine, maybe you and then Cynthia could talk about your experience as issuers in this space, to the extent you're willing to share. I'd love for everybody to understand, you make the point that a lot of data is provided, but it was a significant amount of work to provide that data. So maybe talk about that a little bit, and then I'll have some more questions.
Yeah, absolutely. So good morning, everyone. Katherine Dowling from Bitwise Asset Manager. I'm not an author of the report, but we experienced the portions of the report. So that's what I'm here to talk about today.
Important participant.
Our experience of being one of the many denied. And Morrison raised the question of, through that process, questions were raised by the regulators, and they were appropriate questions, and they should have been raised. And my company and many others, like Cynthia's company, met that challenge by embarking on a research-driven mission to answer the questions raised. Again, appropriate questions. So for our particular experience, my colleagues, so Matt Haugen and Hong Kim leading the charge, spent a significant amount of time and energy just digging into the questions that were raised to provide answers, to give the SEC and the regulators comfort that this market would not be subject to the fraud and manipulation that were at the heart of the questions that were raised. Because to Morrison's point, if you can create that comfort that even though the underlying spot Bitcoin market itself might not be regulated, but that there is a regulated market of significant size that would be subject to the surveillance mechanisms and would not be subject to fraud. Therefore, thus, you can provide the comfort in the underlying Bitcoin market. So Bitcoin undertook different modes of research, largely statistical in nature, to take a look at the swath of the market and make the argument that the CME market was of a significant size, that it would not be subject to fraud and manipulation. And third, that a Bitcoin product, an ETP product, would not be of a significant size that it would itself overwhelm the market. So really kind of three parts to that analysis. The statistical analysis itself, portions of which were reviewed during Annemarie and the Chamber's lengthy, and thank you very much, research. You can dig deeper into it, but just high level, it was looking at lead lag analysis between the CME market and some of the other major Bitcoin spot exchanges. And through that statistical analysis, it was shown in our data that that CME does lead in the price discovery. And then we used a second method, which is not as intuitive as the lead lag analysis, that creates a hypothetical price between the markets. And that analysis as well showed that there's statistically relevant and significant data that would show that the CME market is of a significant size, that it would not be subject to the fraud and manipulation that was at the base of the concern of the SEC. So, and this, I just summarized that in very high level, but this I summarized basically about over 300 pages of research and time and effort that went into looking at this market. And all of that research, the back and forth, the process was shared with the SEC over almost 20 different meetings over time, just keeping an open dialogue, answering questions, and really embarking on a back and forth dialogue, which was very productive up until a point.
Yeah.
So,
Cynthia, you want to talk about Fidelity's experience?
Absolutely. So similar to what Katherine described, so there was a group of us that really wanted to understand the guidance that the SEC had given over several years of prior disapprovals. And what we wanted to do also, given that we were very much interested in understanding the market dynamics. And so we had a team of quantitative analysts, and two in particular, who were not only really interested in the market dynamics, but also had a deep interest in Bitcoin itself. And so Kevin Robertson and Renee Zhang wrote a wonderful paper that summarized nearly a year-long research odyssey, which looked to the existing academic research that had already been done. And there was quite a large body of academic research on Bitcoin market trading. starting out focused on spot market dynamics and price discovery, and then extending and looking at the global spot markets, and then adding futures markets, which was the most comprehensive study that had been done that included the perpetual futures Bitcoin, and looking at where price discovery really was being led. And the analysis that they had done over many months concluded that it was the regulated market, which is the CME Bitcoin futures market. So we took that data and we had a number of meetings with the SEC staff across all of the different divisions and the individual commissioners' offices and their staff as well. The amount of engagement and the number of questions that we got was actually quite good. And we felt very good about the level of interest that they had in wanting to understand the data. We saw that in their commentary and in the disapproval. The disapproval notices that they'd given to a number of sponsors. And while we are disappointed from that disapproval, we have continued to look at the markets. We continue to do the work and the research. And we do continue to have dialogue with the staff about where they are and thinking about the evolution of Bitcoin trading. We think, and we very much believe that it is important to have a regulatory framework for digital asset trading. But we also very much believe that the Bitcoin market has matured to a certain point where we can see that a Bitcoin ETF can trade and trade very well in the U.S. capital markets, and that we don't need to wait for that regulatory framework, given the maturation of the market.
I think maybe we take a minute or two just to talk about why we think a Bitcoin ETF is good for the market. Why is it a product that's preferable to where retail investors can access Bitcoin at the present time? And this is for all of you. Anybody want to start? Morrison, you want to start?
Sure. ETFs have a unique ability to offer asset classes in a low-cost, efficient way where the products are likely to trade close to NAV. It has been proven through a range of asset classes. You take an asset class that may have been institutional in nature and then put it in an ETF, and then ultimately there's broad access to even retail customers. It would bring, to some degree, ease. It would allow people to invest in their brokerage accounts, through the brokerage accounts, in Bitcoin more easily. It would allow for Bitcoin to be an easier part of someone's investment portfolio. And so it is the natural place for Bitcoin to be sold through.
Yeah, I would second that and add to it accessibility, transparency, liquidity, all of the things that should be supported by the SEC. So the irony is that by not allowing this type of product that can more easily fit in the existing RIA financial advisor workflow, more investors are being pushed into maybe riskier areas or areas for which there's less transparency in the market. So you're creating that situation and creating fewer investor protections by not supporting a product that would fall within the current regulatory landscape. So that's the irony here of setting up a dichotomy where you could put the resources into supporting this, making it happen. As the report has shown, it's worked very smoothly in a number of other countries. Yeah. So we have beyond academic use cases where this is working smoothly, and we are just sitting on the sidelines watching that happen, which also pushes more of the innovation in digital asset economy off our shores, which creates a whole host of other issues. So
I think one of the other things that has already been said, but I think it's important to reiterate, is that this product does provide access to digital asset markets and Bitcoin in particular, which is what we're talking about, in a way that is very easily workable through the existing brokerage ecosystem. So it makes it easier for intermediaries and investors to be able to access the Bitcoin market without the complexities of direct custody and market trading directly.
One of the major points in the paper is that if the desire is to protect the investing public, the best way to do it is to allow it to be sold through an ETF. Because as was mentioned and by the other panelists, buying Bitcoin now, and there are a range of ways to do it, but there's nothing as reliable and safe as it would be if you were to invest in a listed product with the transparency and the visibility associated with that. So.
I think, one point is that regardless of all other crypto coins and the kind of disconnect in some ways between the SEC and the CFTC about designation of other crypto assets, both the SEC and the CFTC have acknowledged that Bitcoin is a commodity, right? And so I think unlike many other commodities that ETFs are built around, gold, palladium, platinum, other metals, which might be hard for retail investors to buy. I don't know where I buy palladium. I have, some gold, but not for investment purposes. But anybody can buy Bitcoin. And so that I think again begs the point which we talked about in the report. If there are how many retail accounts on Coinbase, 60 million or so in the US, why is the SEC not encouraging purchasing that kind of an asset through a regulated and well understood product? And again, I think to your point, lower cost in many ways, assurance of custody, all the types of things that the SEC has been promulgating for years, which is registration and investor protection. So to my mind, the fact that they're treating this commodity very differently than other commodities is another part of the conundrum. Anybody have any thoughts about that?
It begs the question, why? What's the reason? Like, what's beyond the technical arguments that we've made and the depth of the research and the effort? You're wondering, gosh, why? What's going on? One not commonly known fact is that in the registered investment company space, there has been efforts to include Bitcoin in some capacity. You cannot own $1 worth of Bitcoin in a registered investment company. Now, there are no other assets such as that. You can own illiquid Russian debt. You can own nearly anything. You can actually even receive property in a registered investment company for which there's no market. But Bitcoin has been singled out. You can't own it at all. Bitcoin and any other crypto. It's just there. It seems like something else is afoot. I'm not sure what that is. I have some speculations, but something's afoot, and that's where we were very disappointed and started to think, gosh, there may be nothing that can be done by the issuers at this point to bring a Bitcoin ETF, considering all the effort and good research that was done. So so at this point, pretty pessimistic unless something happens to move the needle.
Well, Katherine mentioned what's happening globally. Do you want to talk a little bit about developments in other countries since the Winklevoss filed in 2013? Anybody? You want to?
Oh, I'll take it.
Yeah.
Sure. Well, it obviously this same question is being asked around the world, and other countries have started to recognize the need for this product in a regulated fashion. The Canadians, I think, were the first out of the box, and ultimately took litigation in Canada to move the needle. In that 3iQ had wanted to bring a product and had to sue the Ontario Securities Commission to bring the product forward. That also in Australia, in Germany, and Switzerland, they all have access to ETPs or ETFs that include Bitcoin. There have been no circumstances in which there have been a problem. They trade extremely tight, and these have been products that have been very popular in their jurisdictions, so much so that Americans are trying to buy the products abroad. So it isn't like we don't have experience with these products working. They have worked. And there's a history here. And when you think about it, Bitcoin is an asset owned by institutions, pensions, a wide range of investors. The investors who are in the space now, they have to have reliable assets. They are not taking those sorts of risks. So it does seem that the SEC is being overly protective in their approach to Bitcoin ETPs.
Do either of you have products traded on international exchanges in this space? I don't think Bitwise does, but does Fidelity?
Fidelity's international does, which is not part of Fidelity domestically.
Good. Yeah, I think that one of the things that we've been talking to regulators about, and around this report, we're also doing a series of meetings on the Hill. We have a big day on the Hill today, is the fact that we're falling behind, as you said, that U.S. investors are falling behind. If they want to invest in an equity product that holds Bitcoin, they're basically limited to either buying an international product if they can get access to it through the broker-dealer, or buying a product like GBTC, which is not an ETF, which is Grayscale's product trying to become an ETF and has also been denied. Why don't we talk about what the SEC has approved, which was very surprising to almost everybody in this space. But with the change of administration, I think from what our understanding is that there were at least a handful of issuers who felt like they were pretty close to SEC approval at the end of the last administration. And that shifted with the current administration for whatever reasons. And their denials, however, seem like they're consistent with previous denials, despite the production of the data that both Fidelity and Bitwise produced. But what do we think about the fact that the SEC has approved a futures Bitcoin ETF? Katherine, you want to go first?
Sure. Yeah. Well, it's another move that doesn't make sense in the context of the fact that a spot Bitcoin, physical Bitcoin ETF would be a better product for investors. And by that, I mean it would be less expensive. So the approval of a Bitcoin futures product, while a step forward, is that's a product that has more complexities and still relies on pricing from the underlying spot Bitcoin market. So that's what does the exchange. You're still coming back to the same foundation. So you have another irony of a product that's approved that relies on those spot exchanges, yet we still don't have the segue into the approval for a spot Bitcoin ETF, which would be less expensive, less complex, and much more closely aligned to the actual price, the holdings, right? A holding of actual Bitcoin as opposed to a holding of futures in the fund that's one step removed, right? So you have tracking issues, and as I said, more expense. So it's a tougher product for the investing public, and you're keeping that product at bay. That would be a more appropriate, better product for folks, and more easily accessible, as we've all indicated, in traditional brokerage accounts, which would bring it within the purview of financial advisors, RIAs, who work with their clients, and right now are stymied from having a full dialogue about adding crypto as a diversification aspect to their portfolios because they're so limited. Whoa, they're so. Oh, should I start singing? They're so limited in the types and the types of investments that are available to that end. So you'll have the investing public that wants to diversify and smartly should diversify their holdings with the addition of some crypto, yet they're lacking in the products because they're being withheld from the market. And it's, the SEC's role is a very important one. As I said before, they're asking the right questions, but at the end of the day, it's not their role to say whether you can or can't invest in a certain type of product. It's their role to regulate, make sure there are disclosures, and not to say this is a good or a bad investment, or you, Joe, don't get to invest in this. We think it's too risky for you. That's up to the individual. And I think that's an important thing to remember foundationally about what is the role, and is there some overstepping that's occurring in that realm.
Cynthia, you have anything to add?
So maybe just to not add the overly optimistic, but looking at the point that Katherine made, that the addition of a Bitcoin futures-based ETF is a positive step. And if we're thinking about the overall progression of product development in this space, that was an excellent next step. And what we would like to continue in this dialogue is for that, whether it's final or whether it is the next step after that, is logically including Bitcoin, whether in an ETP or ultimately maybe Morrison's dream of adding Bitcoin into a regulated 40 Act vehicle directly.
And I'll have to say, it was a positive step with regards to the Bitcoin futures fund.
Shocking, but positive.
It was.
Yeah.
And the process associated with this it's somewhat unusual in that because the SEC has to approve the applications on the 33 Acts, for what would be ETPs. There is the SEC ultimately has to bless it, and there are people in the queue, and it takes a significant amount of time. One nice thing on registered investment companies, at this point, the SEC doesn't have the same process. It can be much quicker, but the SEC is actually, because while they ultimately open the door to a Bitcoin futures fund, and those funds trade well, and there are quite a few investors in those funds, which is great. It's access, but the SEC has effectively said absolutely no for a straight Bitcoin fund, and threatened those parties that were considering bringing those products, despite the fact they don't really have the ability to control the process in the same way they do with an ETP that is a 33 Act fund. The one challenge that we have is with Bitcoin not being a security, investment companies consist of securities, and so it's difficult to have too much Bitcoin in an investment company. However, some would be an absolute benefit in certain cases. So we're hopeful that there's one more guidance and more sort of acceptance of where the Bitcoin ecosystem is at this point.
Or even some clarity about the steps, more clarity about the steps that have to take place before approval. And that's the chasm. That's what we're missing. There's a lot of kind of high-level dialogue and a lot of statements being made, but let's delineate the three things that have to happen, right? And how to get there, how to productively get there, and to continue a dialogue with industry, with the regulators, with policymakers, and get there, rather than just say this isn't going to happen, and you got to get the narrative out of fraudsters and what have you. It's a little too Nancy Drew for me. We've got to get the narrative back here where we can be productive and not, political, if you will.
One of the things that Chair Gensler has been saying out loud, sort of repeatedly, as a basis for the denials, is that the SEC doesn't have oversight of the crypto trading platforms or the Bitcoin markets in particular. That's not something the SEC has statutory jurisdiction to do at this point in time. So what do we think would have to happen for that, if that's now in fact a gating item, which is something that's new, I think, to the dialogue? What would have to happen, and can that happen, in order for the SEC to be comfortable that there's enough surveillance over the markets?
Well, I would take legislation to expand their mandate, I think. And that's something, obviously, it takes time. The legislative process is long, and not everyone agrees as to how that's supposed to look. And so, when we hear that, it just seems like, gosh, this is a long way off. And in that time period, there are quite a few investors that are going to invest in Bitcoin in a less efficient way, a more expensive way. So we're hoping that there is a path that is the more direct, that doesn't have to rely on legislation to provide an avenue.
The SEC does not have oversight of the spot markets of any other commodity that has an ETF based around it. Based on the dialogue, Cynthia, that you're having with the SEC, and Katherine, that you're having at the SEC, with the data that you provided, has there been any indicia of other things that you can do as an issuer that would help move them closer to approval, or is it more of a black box with people still waiting to get a better sense, to Catherine's point, of who's at the top of the stairs in the Nancy Drew novel.
We have not encountered Nancy Drew, but we in the course of our dialogue, we've been asked questions about specific aspects of our study and the data. So there is that substantive dialogue that we have had. We've not had the discussion about affirmative regulation of spot markets being a gating item directly. But I think with all of the conversation that's happening, both on the Hill and elsewhere regarding clarity and specific guidance for digital asset issuers, it's part of the broader dialogue around regulatory clarity and a framework for this ecosystem.
Anybody else want to weigh in?
I mean, for us, it's been the same resistance. There hasn't been, okay, now answer this question. It just, we had some questions. We both did the research.
Yes.
Our firms did the research, lengthy, detailed research, and felt that the questions had been answered with more than sufficiently answered. And it feels as if the goalpost is kind of moving, as if it was a bit of a mirage, but which is unfortunate because we felt we were close, and the dialogue felt as if we were close to getting this product out on the market. And now it feels as if it's kind of far away without clear, as I said before, clear steps. This question has to be answered. This question has to be answered. So that's, disappointing to say the least.
Yeah. Morrison, anything to add?
We would love a direction forward, right? What do we do now? This is really unusual. The flight path for most assets is something where there is a steady dialogue, especially when parties are engaged, like these firms are, and then ultimately there's a conclusion. You get there. And so that's the and I mean, think about senior loans, for instance, are included in ETF, right? I mean, things that were historically, they even still settle in 2 or 3 weeks. I mean, we're talking about things that are historically institutional assets, but there was a process to work through that. So that's the challenge. I get the feeling that that the staffers that are working on this, they even if they reached the conclusion that they thought they were there, they couldn't move forward. That's my sense, but we've been at this for a long time and keep answering the questions, and I do think there's a goalpost moving exercise that seems to be afoot.
So we have a few minutes left, and I'm going to ask the last question of what do you think happens next? But in the meantime, after the denial of Bitwise in June, Grayscale's application to convert GBTC to an ETF was also denied. And Grayscale has sued the SEC, or has appealed, that finding under the Administrative Procedures Act, basically taking the position that the SEC is acting in an arbitrary and capricious manner. Any thoughts on where we think litigation is going to go in this space? Do we think it's going to actually take litigation against the SEC, which I find very problematic, right? That an issuer has to sue their regulator. That's not a typical move that an issuer's made in any regulated space. But do you think that that's going to be necessary? And I'll ask Morrison this to save maybe Katherine and Cynthia may not want to weigh in. You may want to weigh in, but maybe Morrison first.
Sure. Well, there's precedent in Canada. It worked, right? And there's a framework under which the SEC has to function, right? They have, their mandate is limited in some ways. And so if they haven't satisfied their obligations in the denials, then that something could be challenged and overturned. And so I think it is a legitimate and, in some ways risky for Grayscale, just in terms of, suing your regulator. But it is a legitimate way to move the ball forward. I think also legislation, like as we talked about, there just could be enough of a push and a recognition of the public policy concerns, the investor protection concerns, that it may just push it over the goal line. Like the standard that's set for approval is set by the SEC. It's not the statute itself. That could be changed. And then also too, I think that it's worth looking at legislation, as we mentioned, and perhaps there's a need to be clear as to what the SEC's mandate is and what they can and cannot do, and perhaps a rule changes that would restrict the SEC to operate within the constraints of their mandate and not be a merit regulator. So those are, to me, the various paths that are moving forward. But litigation, it makes natural sense when it's worth it.
So in our last minutes, maybe Cynthia, I'll start with you. You've applied, you've been denied, you've provided the data that you think makes the argument to both your and Katherine's points. Do you think that issuers just keep applying? I know that other issuers are just applying over and over and over again. And I don't mean that to be disparaging or negative in any way, but I think what we heard from some of our members who are in the futures Bitcoin ETF space, they may have applied, been denied, and then somebody applied and got approved, even though they may not have been the first application in the queue. And so is it sort of a guessing game where you apply and get denied until maybe that window opens and you're in the queue, or what do you do next as issuers in this space?
Yeah, there's quite a few points of I guess consideration that go into how issuers think about the timing of when and how they're making filings. As I mentioned, we do continue to have dialogue with the SEC in regards to digital assets and in particular regulation and the conversations around the maturation of the market. I think in terms of at least our next steps, we are continuing to have the dialogue, and at some point, we are not giving up on the idea that a Bitcoin ETF is a not only viable product in this market, but an important one to make available to investors. And so we will continue to pursue the dialogue and join the queue again.
Katherine, we have 1 minute left, so it's lightning round.
Speed talking.
We're
We're pretty much in that same boat. I mean, that would articulate our stance as well. And I think there's a different type of dialogue you can continue to have not having a filing versus one that you can have without one. So we continue the dialogue, and we hope that black box gets opened. And not sure directionally where the pressure comes from, maybe a little bit from the policymakers, maybe a little bit from the litigation that might get to you might get a friendly panel that would open that up. It's hard to say, but it's nothing on the horizon that looks like the express train. Unfortunately, it looks like we're on the local through Poughkeepsie, and it might be a while here.
One last point: if the commission changes in terms of who the members are, it could open it up instantly, right? And so if you're in this process, you almost have to have an application in for it, because that could happen at any point. So it's really difficult to sort of gauge who's going to be in the seat when the music stops. But I think the folks that are serious about it have to do all they can to stay in the game.
I wish it was more like the deli counter where you took a number and you could go finish your shopping and get called back to the counter.
To be all in a group when we all get called.
Right.
Right.
Yeah. Well, I hope that if people are interested in the topic, the report's pretty succinct. And again, I think it's really meant to be an objective, data-driven analysis of the history of the development of the denials. We think that, as Perianne mentioned in the intro, there's a degree of politicization around this decision that has shifted from the last administration to the current, but we'll also continue to have our dialogues with the staff. We sent the report to the staff and all the commissioners, and there's a good amount of interest and they want to follow up with it. So we'll continue the dialogue and the maybe pressure from our side and continue our conversations with legislators to see where we might be able to help solve for this as well. But thank you all for your time and for your participation in the report. And we're just very excited, Rick and Morrison and I, that is finally seeing the light of day, and we're really proud of the product. So thank you all for coming today.